All right, welcome back to Under 450k. This is the channel where I review suburbs or tell you about suburbs that have piqued my interest. And I haven't made a video for quite a while, almost a month, 2 months, really. And the reason is because there weren't many suburbs that really piqued my interest that I'm personally looking into or that I think you should really look into under sort of the 500k mark. Until I saw a comment that said they subscribed and they wanted me to look into regional Queensland, at Rockhampton, Mackay, Townsville. And I sort of wanted to touch on like Rockhampton and Townsville and maybe Mackay. I might do Mackay in this video, but there's a reason why I didn't go too much into Townsville and Rockhampton. And it's pretty simple. Everyone already knows about these suburbs. Like, there's not much to tell about them apart from that they are booming in terms of capital growth, in terms of property prices. Rockhampton City, and if we go up north, we get Townsville City, and these places are absolutely skyrocketing in prices, right? People that I know are putting 10 to 20 to $30,000 over the listing price just to be competitive, right? And you can still find properties under $500,000 in these suburbs. But there are more reasons on why you shouldn't really be, or you should really think twice about investing in these areas at this point in time. And I'm going to break it down for you. And the first thing I want to do is actually mention how much these suburbs have already grown. And this is a big problem. And if you go to SQM Research, which is a free resource that you can go to completely, and you start looking into these suburbs. So I know particularly suburbs like Kurrajong have really gone up in value. And if I take that and type that in over here, you can see that a lot of these suburbs have gone up an insane amount. Over the past 3 years, Kurrajong has gone up 30%, and just the year before, the last 12 months, it's grown up to 30%. So that means you've possibly missed out on 30% of growth. And it's not just Kurrajong. If you look at other suburbs, um, if you look at other suburbs as well, like when you have 48, I think I had 4810 before, you can see that there has been massive growth over these past 3 years. 16%. That means it's almost grown what? It's almost grown 50% over the past 3 years and 20% in the last year alone. And so when this comment said, look into here, can you make one for regional Rockhampton and Townsville? This is the reason why I didn't really want to do it. It's because it's already booming, it's already boomed. And the truth is, these prices will most likely continue to grow. And I'll show you that later. But let's also have a look at some suburbs in Rockhampton, right? For example, Berserker. I just want to show you one of the suburbs, right? If we look at Berserker, Park Avenue, Frenchville, Norman Gardens, and even Depot Hill have grown insane amounts over the past 12 months. So if we take Berserker, for example, what's the code 4701? I think I might have it. Yeah. So I already have it. You can already see that it's grown 17, 18% over the past 3 years, and it's grown 30% over the past year. Now, when you look at this, there is no way that you can predict exactly at this point in time in April 2022 to buy a property, right? That's not possible. But you can predict in November 2022 that you probably could have gone in the market, and you could have maybe even predicted in May 2023 and sacrificed this much growth. But now you have sacrificed almost 50% worth of growth. And if you want to enter into this market now, you have to accept that you've almost missed out on 30 to 50% of capital growth. And the real question becomes is, when does this market peak? Because once this market peaks, it will no longer grow at the rate it's growing. In fact, it might revert back to a sort of 7% average every single year over the next 30 years. And you won't see this significant of growth ever again for a long time. And it's not just Berserker, right? Let's look at Park Avenue. That's also 4701. Let's have a look at Allenstown. I think Allenstown's a different postcode. Yes, it is. So if you look at Allenstown, we can see once again, it's had almost 16% per average growth over the past 3 years and 37% growth over the past 12 months. These properties have grown up in insane value. As I was mentioning before, let's have a look at a suburb much like what we looked at Townsville in Kurrajong. I think this is a prime example and pretty much sums up the situation of what's happening in these areas. When we look at them, you can see that the days on market is 39 days. That means it's taking an average of 40 days to sell a property once it's listed on market. And I know for a fact that these properties are being sold the day, 2 days after they've been listed by investors who are ready to pounce 20K over the listing. So it's not really 39 days. It's more like a day or two, realistically, is what's happening there. The stock on market is still dropping and it's dropping to 0.5%. That means there's barely any properties available to be sold. That's just putting more price pressure on the market. Gross rental reals are 6%. So it's actually quite good. And a lot of the rents are actually covering a lot of the expenses for the property owners and for the investors. Now, they're still most likely going to be negatively geared, but not as much compared to other suburbs that you could be investing in. And then you've also got the vacancy rate, which is incredibly low at 0.72%. And these are just rough guides, but you can tell already that all these factors concoct together and they have such a heavy price pressure on the market. And this is not only in Townsville, this is in Rockhampton and Mackay. They all have similar tendencies, and we're also starting to see that in Gladstone. But then this raises the question though, should you be investing there? In my honest opinion and in my personal risk portfolio, a lot of investors who are coming into the market now, purchasing in Rockhampton and in Townsville, they're already too late. They are just too late. Investors have already bought an year or two ago, an year and a half ago, and they've already reaped the rewards. Now, you can still get in the market now and maybe get some gains, but you definitely won't get as much. And you're also putting yourself at higher risk by putting more cash up front and paying higher for these properties. This really begs the question though, like what are you willing to risk and what is your risk profile? And you have to make a decision based off that. Now, there's also a couple of other reasons which you need to be aware of when you purchase in Townsville, in Rockhampton, and Mackay. This applies for all three of them, right? All three of them have massive rivers running through them, which means you'll most likely find that most properties fall under a flood zone as well as an airport, but mostly a flood zone, which means you'll have higher insurance premiums, and you should factor that in when doing your numbers. The other big thing that I've noticed with Townsville, Rockhampton, and also Gladstone and Mackay is that they have very high council rates compared to other states and other suburbs, almost 3 grand and above for some of these suburbs. Now you need to understand one thing: council rates and insurance premiums, they never, ever, ever decrease in value. Maybe insurance premiums by a little bit if you shop around and you can somehow get a good deal. But most likely they will always, always, always go up. So if you start at 3 grand council rates, you're only going to be paying 3.3 or 3.6 the year or two after. So factor that in because they are very high holding costs and they do affect your yields. And I know investors say, "Oh, that's all tax deductible." You still have to pay that upfront, okay? So, and you're only getting about 33 or 45% back on the dollar for all that money that you spend. So, if you can't hold a property, you should really think about whether or not you should be investing in these areas. Now, the other reason that you should consider whether you should be investing in Townsville and Rockhampton is, like I said, these suburbs are incredibly hot markets at the moment. People are paying $20,000 to $30,000 over the listing price. And you need to ask yourself, should you be looking somewhere else on whether or not you can find a better deal somewhere else, closer to the bottom of the market, but also having the important data trending in the right direction. And what I mean by important data, I mean days on market, stock on market, vacancy rate, the demand to supply ratio on DSR data. All those factors combined together, including building supply. And you need to look at the supply and demand of these areas. And if all those factors point in the right direction and you're closer to the bottom of the market, unlike Townsville, unlike Rockhampton, unlike Mackay, then you should consider those suburbs over these regional towns in Queensland. A lot of people, a lot of investors are currently FOMOing out of these areas and they're jumping in at this point in time and trying to spend tens of thousands of dollars extra, even though they shouldn't be. to sum up these areas, right? And to be honest, these areas, Rockhampton and Townsville, they have a very good diverse economy. A lot of them are in healthcare, trade, education. This is Rockhampton, by the way, in transport and construction, as well as Townsville, who has also very good diverse economy, which means it's not dependent on only one industry. So if it collapses, it still should be fine as an economy. It's got mostly in healthcare, public system, and construction as well, a little bit of manufacturing as well. So very strong economies, but just not the right time to invest in them. I believe the time has already passed, and I believe people who are buying in there now are just FOMOing out and trying to get in the market. And you have to remember, the deals are like buses. There's always going to be another one coming. For all of those watching the video, and if you're thinking about Rockhampton and Townsville and Mackay, the number one thing I'm going to tell you guys to do is go on to SQM research, type in the suburb or the postcode that you're looking at, and just look at how much it has grown. Just look at it and be like, can this property, can this suburb continue to grow at the rate that it's growing? At one point, it will stagnate. And I think we're coming to that top. For the next 6 to 12 months, it's still going to grow by a little bit, but I don't think we're going to have the boom like we did already. So that's my 2 cents. So hopefully I've answered your question. If you have any more suburbs that you'd like me to dive into, please go ahead and leave a comment below. Apart from that, subscribe to my newsletter where I do a little bit more basic but in depth of each suburb that I'm looking at. To sum it up, people, I'm actually looking at a couple of suburbs in Melbourne, which I think are picking up again, believe it or not. I think Western Australia has suburbs over $500,000 available, not under 450K at all. I think there are some in New South Wales, extremely regional areas, which can possibly give you good returns. But I don't think Townsville, Rockhampton is the right call for a lot of investors at the moment. But again, it depends on your personal profile and risk profile. But I suggest you do your research very, very thoroughly. And once again, I already made a video on this and it's done somehow very well. Gladstone, make sure you do your research on Gladstone, because I can tell you for a fact Gladstone and this area, New Auckland, Kincora, Talina, this whole area is booming up right now. It is booming, but I think if your strategy is to hold for a long term, I mean 7 to 15 years plus, I think this would be a very underperforming area at this point in time. So till next time, subscribe, follow my newsletter. Peace out.